Okay, good morning, folks, and welcome to Swing Trading today. We're going to start a couple minutes late here, so my apologies. It is 5:11 in the a.m. Eastern Standard Time, and it is the 22nd of January. I'm just looking at gold. When I went to sleep last night, gold was down around $6. It has since rallied back, which is really no shock, and just this very minute turned positive on this session. So I think that what we're about to see here on gold is a big move higher. Now, this is a 4-hour chart. These will all be 4-hour charts. Yesterday on the gold miners, you saw complete and utter total manipulation yesterday morning. We spoke about this. I even sent out a text to one of our members, a couple of friends of ours, and said, you know what, I see bonds rallying, yields are down, the dollar is down. We have a lot of headline risk out there. The fact that gold is down, the miners down, it simply just doesn't make sense. It's possibly a head fake. And that's exactly what it turned out to be. I'll go to that chart in a moment. I'll bring up the GDX. So this morning, what we're looking at is a right side of a W on a 4-hour basis. Here's your left side. Here's your pivot point right here. 2 bars of equal height at around, let's call it they're 1 bip off of each other. Let's just round it up to 1600. Boom, done. We get a rally up and through that level. We're going a lot higher on gold. And we will probably, I know Peter Schiff is out there. He put a 2,000 handle on gold by year's end. I don't know if I'd go that far, but I think that we could certainly take out the highs of the month. I'll be a little bit more sanguine in my price target here, but it is looking very good. Now, yesterday, this is what they do. Now, everybody needs to remember one thing about the bullish engulfing pattern. It's required that they blow out stop loss orders. I'm going to bring up a chart of, we talk about Nugget all the time. Let's bring up Nugget. So here's the anatomy of a bullish engulfing bar. It requires that you take out the prior day's low. Check that box. We did that yesterday. Again, this is NUGT daily basis. And requires that we take out the highs of that prior bar. Now, what traders like to do, let's drill down here to let's go to a 5-minute chart. What traders like to do so they can load up on the cheap is blow out stop loss orders, which is what they did yesterday morning. Even though everything was going for the miners, every reason why they should rally was there. And they blew out a bunch of stop loss orders. We were not shaken out. We held our ground. Because for the most part, we had a good idea of what was going on. And this comes with experience. So they rallied them back. Check out Friday's highs here. Pulled back off the highs of the session yesterday. Consolidated another W formation off to the races. Strong close. I think that there's a good chance today that we pull back, and I do have a plan in place for adding more to the NUGT, and we will be sending out alerts to members. So please join up. We are up significantly on this trade, and we plan on adding more, and we plan on sticking around for a while. So let's get back to the pre-market futures action. All right, so gold about flat now. Let's take a look at the US dollar. It was down yesterday. It closed off the lows of the day. We're up this morning. And you're seeing this more and more where the dollar will trade up along with the price of gold. And this coronavirus out of, if I'm saying that correctly, hopefully I am, is growing in significance. And it certainly can be a geopolitical risk. The fact that it's now hit the U.S. mainland and Washington State is a concern. And I started doing a little bit of research on it because I really don't want to speak to it until I have some sort of knowledge. And apparently I think there's 440 cases, and there's about a 2% of those cases anyway, 2% fatality rate or mortality rate. And that makes it significant. So we'll watch and see how fast this grows. And I wouldn't be the least bit surprised knowing the Chinese that the problem is significantly larger than what they're leading on to us to be. So I'm not going to be the least bit surprised. This is the reason why I bring up the coronavirus with regard to the US dollar. I'm not going to be the least bit surprised to see the dollar hold a bid here as a safe haven trade, but also see precious metals hold as well. This line marks the highs of the Sunday session and today's session. Watching for a breakout. Let's bring up Palladium. A lot of conversation with regard to Palladium. Showing the bid this morning. I was running some analysis last night. Palladium on a monthly basis, the correlation with the GDX is about 75% of the time. The correlation with gold is about 90% of the time. And that is on a monthly basis, maybe a little bit more volatile on a daily basis. Palladium's looking good here this morning. So, as I always like to say, when we are trying to put on our thinking caps and to divine whether or not a stock, or in this case a commodity, is going to break out to new all-time highs, it can be stressful making that call. I choose not to make that call. I would rather play it smart. I would rather say the test is always at the top. Do we break out or do we break down? So there's two ways to trade Palladium right now. You can wait. Wait and see whether or not traders have the firepower, the rocket fuel, the audacity to break this thing out to new all-time highs. A lot of the froth has come off the daily RSI. I haven't checked the weekly RSI yet. I should have. As a matter of fact, let's bring it up right now. I think we may be having a technical issue here because I'm not seeing one single chat come through. So if you're not hearing this, folks, it's because your chats aren't coming through. It's not me ignoring you. All right, so daily RSI is coming off, or has come off, I should say. Let's go to the weekly. The weekly has come off as well. The monthly is still very extended. Hey, Sam. Oh, there you go. Sam, did you type anything prior to the test comment? Really weird. All right, so Palladium still overbought on a monthly basis, but that doesn't mean it can't go higher. So let's go back to the intraday chart, which is actually setting up pretty nicely, to be honest with you. As much as I want to say, hey, go short this thing. And I said it yesterday. I said that we would not be this overbought by the end of the week. And sure enough, the froth is... Okay, thanks, Sam. Appreciate that. Palladium certainly come off those highs. So the test is always at the top. Do we break out or do we break down? If we pull back and do a retest of the support level here at, let's say, 22.43, is that right? Hold on. 22.34. If we pull back and do a retest, you can look to open up a long trade with a tight stop right below, especially below this support level here at 22.01. Because if we put in a lower high on Palladium and then we break down below the support level here, that's a short-term confirmation breakdown. And you definitely do not want to go buying Palladium, please. Especially if you have profits in this and you're thinking about averaging down, please don't do it. That's how people blow up their accounts. Don't do it. Don't do it. Don't average down. There are times when you can average down. This is not one of them. All right, so if we put in a lower high and we break to new lower lows, that's the market telling you it's done. Stick a fork in it. There's plenty of other opportunities out there. So please go elsewhere and enjoy your profits. Let's go to silver, which did not have a good day yesterday, along with gold. Gold was down yesterday too. But the miners, watch those miners. All right, silver, down this morning, not much happening here. It's funny that silver typically outperforms gold, especially at the pinnacle of a bull market, but it lags at the very beginning. Not that we're at the very beginning, but we're pretty early, in the early stages of a bull run here on gold. And we probably, if we break out to a new all-time high, we have on average 3.5 to 4 years worth of a bull run to go after that. So we're still very early stages. Nat gas, what a beating it took yesterday. And Sunday, I should say. Sunday. So yesterday morning when we spoke, we had just come off of a Sunday evening session that was just absolutely devastating. We are still trading with a one handle on spot price. Yesterday morning, we were attempting to break out. We saw a breakout point failure. And what was support has now become resistance in red. So we're going to make this green. And this, what was resistance, has now become support. So there's nothing that should be done here right now. Until such time as the market tells us that we have a clear breakout or a clear breakdown, I'm not looking to short natural gas. So if it breaks down, so be it. I'll just be looking for a good entry point on UGAZ. ARL, good morning to you. Sam, hyperbolic price daily on futures on UGAZ, right? Yeah, it's on nat gas in particular. Yeah, it's certainly when you take a look at. I was looking at this last night. When you look at UGAZ, because this is what I usually trade, and we've traded it, I think twice this year. Maybe it was once in the back half of last year and once early this month, but I think it was twice this month. Where's our daily chart? And both times successfully, we made a profit. But the only way we knew to book those profits is that we respected the fact that we were in a long-term downtrend. All too often, people delude themselves into thinking that, wow, the stock is oversold, can't go any lower, and rather than enjoy a counter-trend rally and booking those profits, they hope that they're going to run into a new bull market, and they get whacked. All right, so UGAZ daily basis, we have still a lot of room to the downside in RSI. Yeah, we popped off of the third standard deviation Bollinger Band yesterday in red. I still think that we have more downside to go here, particularly when you tip your hat to the volume that we saw yesterday, which was massive, not just yesterday, in recent days. So for me, it's not ready yet. It's certainly on our radar screen. Good morning, Pat. It's certainly on our radar screen, but it's not ready yet. I mean, even when you take a look back here, if you're going to use the third standard deviation Bollinger Band as a rule of thumb to get long, I love the measure, I love the indicator, but as a standalone reason to get long, I don't really advocate that, but only in certain situations. Like back here in May, you had a similar setup. We didn't bounce, but similar setup. We leaned into it, but then we continued down lower. We traded sideways one day, and this is the concern I always get off of trading off of the Bollingers, is that all a share need do is trade sideways for a day, thus alleviating the oversold condition relative to the indicator, and you continue lower. So as a standalone indicator, not enough for me to say, okay, let's go buying or shorting. What I like to do is watch RSI move into extreme oversold territory, like RSI sub 20, and then you have and that's my primary indicator. The UGAZ Bollinger Band, the third standard deviation Bollinger Band would be a secondary indicator. And we use that as our confirmation indicator to get long. But volume would need to drop down. I don't want to fight these guys. They're way too big and they'll wipe us out. Yeah, I think so, Pat. I mean, it's cold here in New York. I know it's cold down in Florida, and nat gas can't catch a bid. There's so much of it. All right, so that's a tale of woe with nat gas. And after I just said all of that, be cautious. It's probably going to have a short covering rally and make a fool out of me. But those are the joys of trading. All right, what else do we want to take a look at? Bitcoin and oil. Oil's a concern. All right, so Bitcoin is very quiet, very, very quiet. We remain within a trading range, a trading channel. We remain long. We'll set up an early warning indicator here. Not that I'm going to add more on it. But what I want to do is know when we begin to see signs of life and we begin to eke out above this upper band of resistance, because in all probability, if we eke out a close above this yellow line here, we're coming up here to primary resistance and we'll look for a breakout. And we did analysis on this several weeks ago that there is a correlation between Bitcoin and inflation. And yesterday, you saw the chips begin to move up higher. For those not familiar, those are Treasury inflation protected securities. Yeah, I did, Pat. I did. Well, I'll go back and revisit it. So the chips rallied yesterday. They haven't broken out to a new run, but if the chips are rallying, you should expect that there's inflation in the system, and Bitcoin should catch a bid on that breakout. I'm going to read a couple of comments here. Pat, gold, I'm going to go back to that for you, Pat. Sam, SP futures had broken the top. Now it's retesting the break even. Yeah, I think the S&P, I mean, the transports told the story yesterday, right? If you, not even yesterday, I mean, the transports have been telling the story for days now that this market is long in the tooth here. I mean, you know, this always gets me, especially with these pontificators on TV, these so-called professionals. You know, the transports are a leading indicator. They've been leading the directional breakdown or breakout of this market for a long time now. And to ignore the fact that, granted, this is not a third standard deviation Bollinger Band, but it's a two standard, and this is a major index. To ignore, as Sam puts it, this parabolic move higher is amateur hour. How do you ignore this? How do you not acknowledge the fact that, hey, listen, man, we're going to get a pullback here? You know, is it a breakdown? I don't know. I'm not that smart. But how do you ignore this? And all they say is we're long-term investors with their $3,000 suits and slick back hair. It's ridiculous. All they try to do is lure people in with a false sense of security because they're buy side only. They can't short the markets. They can't be more than X percent in cash. They need people to buy stocks. They go on CNBC and they provide them a forum. It's all a joke. So this should have been no shock. The sell-off, and it's probably going to get worse. I mean, if China's selling off so hard on this coronavirus, why wouldn't it spread here to the United States, the selling, if it's already in Washington State? I mean, if it's bad enough for the Chinese, it's going to be bad enough for us, especially if it hits California and the East Coast, and that's only a matter of time. John, hey everyone, was it Robinhood where you could say Bitcoin without? Yes, John. Webull and Robinhood. But Robinhood just got in trouble for front running, and I don't know if they've been convicted. I need to do more research on it, but they just got in trouble or charged with. I want to be fair here. They were charged with front running their customers' orders, so that's certainly a negative in their box. Patrick, Davos, Trump wants interest rates lower. I don't agree with the negative interest rate thing. Going down the no offense to Sam out there and the other European viewers, but it's certainly not working out well for. Good morning, Arthur. It's certainly not. Yeah, good point, RL. Chinese New Year travelers. That's right. It's certainly not working out well for the Europeans. Negative interest rates. Their banks are just zombies, absolute zombies. All right, let's take a look at gold really quick. Let's see if the Davos news is having an influence at all. I think the markets are becoming somewhat immune to the president and his banter with regard to lower yields. And frankly, I just don't. Even if the Federal Reserve said that we're not going to raise anymore, we have so much debt, so much. We have the twin deficits, and I mean, what difference does it make if they stop raising rates? I mean, we're way behind the curve. Inflation is on the rise. The PCE, what is that thing? You know, the CPI is telling the story. Uh, the chips are telling the story. That's all I need to know. Just because one of their favorite indicators is not flashing inflationary signals, it's because it works for them. That's the only reason why they keep referencing it. If it didn't work for them anymore, they go to the CPI if that worked for them. So, when I say for them, it's the Federal Reserve. So, gold looking good here this morning. We're looking for a breakout. We have a W formation forming. Here's our pivot point at the 1600 mark. Looking for a breakout there. And if we get that breakout, expect shorts to cover. I didn't go over the stock market futures yet. Let's go over them. Before the stock market futures, I want to keep an eye on oil. And it's down again. And the reason why oil is so important is for two reasons. One, whenever you see weak oil, you get a false flag event over in the Persian Gulf. Saber rattling just to get the price of oil back up. Expect it. Because it's election year and you cannot have layoffs in the Bakken and hope to have the president reelected in a wide margin. Those are high-paying jobs, and you have those high-paying jobs in the Bakken area, down in Texas. Those frackers, they employ a lot of high-paying people, and they are Trump voters, and he's going to do anything to keep those people employed. So, watch for a false flag event. We broke down yesterday below support. We're attempting to recapture at current. As far as I'm concerned, we are weak and we are getting weaker here on oil. I would not be a buyer until such time as we close through or up above 58.76 the barrel on light sweet. Let's go to the stock market futures, NASDAQ. All right, so Netflix reported we are up significantly this morning on the NASDAQ. Let's bring up Netflix. And this is a perfect example. We went over this last night on Market Wrap. A perfect example of why you never, ever, ever trade the knee-jerk reaction. Here's when earnings were announced. This is all algorithms. Buying, selling, rapid fire. This is why I don't day trade. One of the reasons anyway. You have these rapid fire algos out there, and I'm too analytical. I just simply can't make a decision that quickly. And there were thousands upon thousands of trades made here in milliseconds, and a lot of them were wrong. And sure enough, we stabilized. Here's what you wanted to see. A spinning top formation, off to the races, and Netflix appears poised. The initial knee-jerk reaction was to the upside, then down, and it was off to the races. So Netflix looking good this morning. We are flirting with the highs from back just last week, last Tuesday. So no serious breakout here. So I'd be careful here of the NASDAQ. Let's check out the Russell. I mean, the price move on the NASDAQ seems a bit euphoric. The Russell is not looking good. We're up. We broke down below this lower band of support. We're limping back up now. I would not be a buyer here. I would certainly not chase either one of these indexes. Let's take a look at the S&Ps. They're up as well. RSI is looking good. And we have a bit of a breakout here. So the S&P 500 is looking pretty good this morning. IBM, let's throw it up here. Wow. I think the charts reflected and anticipated this move higher. I mean, it was looking good last week. So they had their earnings, obviously good. So IBM looking rock solid, because when you take a look at IBM, we went over this, I believe it was last week. We went over IBM and the chart was just looking all sorts of pretty. And we'll go with the weekly view here. Obviously, this is not reflective of earnings yet. We have a continuation move higher on a weekly basis. We broke out of this triangle formation several weeks ago. We did a retest, follow through to the upside. Daily chart, I mean, that's a pretty chart. RSI had broken out. Here's another breakout, consolidation, continuation move higher, a close above the 136 spot 42 mark. That was a buy signal. And off to the races. Very pretty chart. Let's bring it up on Trend Spider. Let's see where our resistance levels are. Too lazy this morning. I need another cup of coffee. All right. I saw that, Pat. Initially, it sold off in the pre-market and rallied back. That was definitely a tell. Good point. I forgot about that. All right, so the monthly chart looking really good here. We're flirting. I had an alert fired off here. We're flirting with a breakout on a monthly basis. Oh, on a weekly basis, I should say. Let's go to the weekly chart. Yeah, here you have it. Much clearer here. So we broke out last week, retesting this week. Looks like we're going up higher. I think we could head up here to the mid 140s pretty easily. Where are we now? Oh, we're there. We're already there. All right, so we just keep in mind going into the trading day, folks, that we do have resistance above where we're trading in the pre-market. So be very, very careful. There's going to be some profit taking in all probability at some point in time today or this week. But the chart still looks very, very good. And that's a huge move for IBM, 5-6%. Huge, huge move. So that'll take us, we're very, very overbought here. I'm extrapolating out on a daily basis. We're very, very overbought relative to the third standard deviation Bollinger Band. when we open up today. So just be careful. But for those who got involved, I didn't get involved. I should have. Congrats on that trade. Pat, were you long? Hopefully. Let's leave off with gold. Yeah, so gold is holding firm here. And what's also bullish here, folks, and this is one of the reasons why we predicted that yesterday was a head fake to the downside on gold and particularly the miners, was that you had the markets that were very, very weak, along with yields which were weak, along with the dollar that was weak, everything going for it, meaning gold and the miners, they should rally, yet they didn't. They didn't. So you knew that some nefarious stuff was going on yesterday morning, and sure enough, we saw a bullish engulfing day. So gold looks good, even though we have the futures market for equities up very, very strong. Gold is keeping a bid. So you're seeing money flows into gold because remember, we were down over $6 overnight. And now we're back. We're positive. So it's very good. Arthur, IBM is short. If it pops too much this morning, those earnings aren't anything to get excited about. Okay? A good point. So, and yeah, so to Arthur's point, it looks as though we'll probably, Pat, no history, not great, but was due. We'll be trading above technically the third standard deviation Bollinger Band. Take that for what you will. It's not supposed to be there. And we are up and into historical resistance in the pre-market. It's not reflected on the daily charts I just showed you. So just as Arthur said, be careful today. It is overbought, and you're going to see some profit taking. And with that, folks, I'm going to say have a great day. If you can hit that like button, I'd really appreciate it. It helps me out with the YouTube algos. And subscribe to the channel. Everybody have a profitable trading day, and I will talk to you soon. Be well.